Bank, ING, from ING Wholesale Banking is now joining us on the phone line. Thanks so much, Iris, for taking out time for us. What is the sense that you get regarding this trade wars? Do you think it's right now, getting into that phase where it will start to impact the growth?
It's not yet. The extra 200 billion worth of goods tariffs will be effective only by September. So the hit on the economies, both China and U.S., will come in gradually from July and then later in September. Hope that we will not have any more, but we actually estimate that Trump will escalate the trade war before the election ends.
Right. Do you think that it will also lead to opportunity for a lot more other emerging markets to try and up their production to other countries?
This is one possibility. Another possibility is that apart from moving production plants away from the two economies, producers can choose to move their production sites to China or to U.S. if they want to serve the domestic market. So anything can happen between now and the effective of tariffs. And I think most of the manufacturers are thinking about a sensible solution for themselves. Each sector is different. For example, they have to consider the transport cost, the taxation issue on the production location, the production economy. So each one is different.
Hi, Iris. This is Nantara that's joining you from the New Delhi studio. You know, what we did see as a reaction to this was the Asian stock markets, particularly the ones from China, closing lower. European markets have opened a short while back, and they have opened sharply lower. You're seeing gold prices also falling thanks to the trade war. Crude prices are crashing as well, but that's for a totally different reason, to do with Iran and the latest comments that have come out of Washington, D.C. These are very volatile times that are ahead of us. Where do you think that when we're seeing this kind of sell-off across the world, where is the money actually going?
I think the money is going into some safety haven. For example, Japanese sovereign bonds in Asia, or German bonds or U.S. Treasuries in Europe and America, respectively. So it is likely a risk-off sessions, but it is not the end yet. We still have to see what is the impact on the real economy and on business earnings. So I think the market is reacting just to the overnight news, and it is just the beginning of the bad time that we are going to see.
You know, if you look at the kind of items which are now coming into tariffs, it's no longer about aluminum and steel. You're talking about X-ray machine components. You're talking about airplane tires, industrial parts. There are even food products involved, whether it's fish products, sardines, tuna, cod. These are all in the extensive list. You've got garlic, cabbage, oranges, cherries. So from food to industrial products, everything is being covered like this. So would you say that this is an opportunity for newer economies to really emerge and come up, with China being on the defensive and on the subject list of this trade war? For example, let's talk about Australia. When you talk about fishing, is this an opportunity for Australia to now start flooding the market?
I would say that it all depends on how the tariffs comes into the real economy. The tariffs can be absorbed by the producers or can be shared between producers and consumers. And whether consumers prefer a particular brand or taste or so it is really depends on how the tariffs is shared. Yes, there is some substitution effect for example, Taiwan machineries for China machineries. There is, and also, for example, Australian fruits for U.S. fruits in China, for example. But they are also expensive because of the transportation cost. So whether they are good substitutes or whether the original goods that are subject to tariffs, part of the tariffs is absorbed by the producers is a question, and they have to decide on this. And that's why I say that the full impact has to be seen. We are not there yet.